Hey, what's up? This is Greg, and welcome to the channel, and this is your Fed update. Okay, well, this week a lot of stuff was happening. A lot of news came out. On Wednesday, the Fed released the minutes from the Fed meeting, and a couple things came out, and I thought that were very, very interesting, okay? First of all, it seems like the Fed at this point is finally getting serious about fighting inflation. Not only did they reconfirm at least 3 additional 50 basis point increases in the Fed funds rate, but they also started to talk about upping the ante on their policy to deliberately slow down the economy to combat inflation. And for the first time, they started talking about not just a neutral policy, but actually a restrictive policy. This is very notable because it seems like the Fed is finally recognizing how behind the curve they are with respect to fighting inflation, how long they have kept their loose policies in place, and it's really caused a detriment to the entire economy. Notably recently, as I'm sure you've heard in the news, Walmart and Target came out and they started talking about not only demand destruction relating to sales, but also that increasing prices and increasing costs are starting to severely hit their profitability and their margins. Okay, what's happening out there is retailers are not able to pass along these enormous cost increases to their customers. And the lower income and middle income people are just not able to keep up with these enormous price increases in all the goods and services and food, energy, no matter what it is. It's really eating into everyone's budget, and you're seeing a decrease of demand, which we call demand destruction, across the board in a lot of things. It's funny, at the end of the week, there were a couple sort of, positives that came out. Some of the low-end retailers like Dollar General reported, stronger sales. But to me, this is not a positive, even though the market sort of looked at it as a positive. It's not a positive because it means that lower income people are reverting to these discount retailers, just to survive and buy basic necessities. I mean, that to me is a sign of distress. It's not a sign of positive. The other thing that's interesting is that even though I believe we are in a bear market, the market is still looking toward any glimmer of hope to try to rally. And I think that a lot of people think stocks, particularly tech stocks, are cheap. So at any glimmer of positive news, they're jumping in and buying. And this is why you're seeing the rallies. And I think, of course, if you look down through history, very sharp rallies are very common in bear markets. And I believe, of course, I've said many times in this channel, I think that we are in a bear market. And I've been saying that for weeks. I had a short position on the QQQ via the 𝐥𝐴. I took it off a couple days ago because it felt like the market was going to rally. The market has, in a short term, got very oversold. So I think that a rally at this point is, we're probably overdue for a rally, I should say. So anyway, I think the Fed is in a continued very difficult position here. They are going to continue to try to, at this point now, deliberately slow down the economy, which I think that going into a recession is a complete inevitability. And I predict that you will see a recession in 2022. We already had declining GDP growth in the last quarter. I think you're going to see a recession this year, and I think that you're going to see a continued bear market. I think the sell-off has a long way to go. I've been watching the VIX. The VIX is hovered around 30 and then it declines back into the 20s. I think you're going to have to see the VIX climb up into 40 or 50 before you see this capitulation, which is finally going to wash out all the people that are jumping in and buying, thinking that the market is cheap. We are in a period of Fed tightening. If there's one thing you need to understand about the stock market, it's follow the Fed, don't fight the Fed. You cannot have a bull market during a period where the Fed is draining liquidity from the market and raising interest rates. Okay? So I hope this update was helpful. I will continue to update on the market and put out more long-form content on various issues that I think might be of interest. And so if you get value out of this, please like and subscribe. And I look forward to bringing you some more great content in the near future on stocks, investing, the market, the economy, Fed policy, and all of those things that will give you tools to become a better and richer investor. Thanks, and I'll see you on the next video.